Global stocks market relied on Monday, May 12 after the United States and China agreed to reduce their step mutual tariff for a 90-day period, a move that may have paused the ongoing trade war between the world's two biggest economies. However, this temporary halt does little to fix the core issue at the heart of the dispute, including the persistent U.S. trade deficit with China and President Donald Trump's claim that Beijing has not done enough to combat America's fentanyl crisis. While investors welcomed the development, the business community reacted with more caution, appreciating the relief but still seeking greater clarity on the long-term outcome. Trump and his allies framed Monday's agreement as evidence that his aggressive tariff strategy is working. This comes after the US also reached an initial trade pact with the UK last week, now followed by progress with China. U.S. Treasury Secretary Scott Bessent, who finalized the agreement in weekend talks with Chinese counterpart in Geneva, acknowledged that it could take years to restructure trade relations between Washington and Beijing. Under the temporary truce, the U.S. will reduce additional tariff on Chinese imports, imposed last month from 145% down to 30% for the next 3 months. Meanwhile, China will cut its duties on U.S. goods from 125% down to 10%. Financial markets responded positively to the ceasefire in the trade conflict that had frozen nearly $600 billion in two-way trade, disrupt supply chains, and trigger layoffs across industries. Nevertheless, investors remain concerned about stagflation, a toxic mix of high inflation and sluggish economic growth that continues to loom over the global economic outlook.